Sure. So I'd say I want to continue kind of that narrative evolution
Hmm.
that Kathy mentioned, right? Where we started off in 2015 with could Bitcoin serve the role as a disruptive currency? Chris, a few years later, kind of wrote, is Bitcoin the birth of a new asset class? And then more recently, we published a paper on kind of a new mental model around defining Bitcoin and these crypto networks as novel economic institutions, like as a new form of institution that kind of introduces a new form of economic guarantee. And I think that is a very kind of interesting mental model, especially as we're shifting from the physical to the digital world of what these institutions represent. There's a massive innovation now in basically kind of shared state, where as opposed to with traditional databases, here you have kind of this read-only database that is open source, in which the right axis is mediated by open and fair markets. And so the coordination mechanism is completely has completely evolved from what we traditionally rely on in centralized institutions. And so when you kind of think about what this is really good for, it's great for money or digital gold, as we're seeing with Bitcoin. What excites me the most about Bitcoin is that it's really kind of the first legitimate attempt at a non-state money. It's a representation of sovereignty. It's a tool for freedom in developing nations. And so the way that we kind of our thinking has evolved. I recall in the early days when Chris was sizing the opportunity, we were looking at the remittance use case. We were looking at kind of the potential digital store of value use case. Now in the context of kind of the macro conditions, in the context of the broader adoption in developing nations, I see Bitcoin as really this novel economic institution that transcends borders, that is politically neutral, and that sort of introduces a new mechanism to facilitate economic activity. Now, how does this kind of how do we see this play out in real time, and what sort of data can supports this investment thesis or kind of the general adoption curve that we're seeing? I think you can segment this in a few ways. I think there's the qualitative aspect of it, right, where we're seeing the actual adoption firsthand in real time. El Salvador this week announced that they have now rolled out Bitcoin as legal tender, and people are able to kind of get their $30 worth of Bitcoin airdropped on their wallet. This last year, we've also seen corporations adopt Bitcoin on their own balance sheet, institutions. So there's been like kind of a general adoption curve that has extended beyond retail, and particularly this year, that I think has excited us the most. On the quantitative side of things, and you kind of alluded to this in terms of on-chain data, I think investors are increasingly starting to realize that the conventional frameworks to analyze these crypto assets aren't suitable. And in fact, I'll credit Chris again for really bringing that conversation in the early days with how do you value crypto asset, right? You can't really apply a discounted cash flow model to valuing Bitcoin or Ethereum. And increasingly, we're starting to realize that the answer is actually right in front of us. It's with the wealth of data that these crypto assets provide, given their open source nature. And I think increasingly, the power of on-chain data to assess the network health fundamentals on the first layer, but then on the second and third layer, to actually identify the relative value of these assets based on what this data is telling us, is going to become, a very meaningful part of how investors broadly assess these assets. So we recently published kind of a framework by which to analyze on-chain data. We have this three-layered pyramid where at the first level, it's really just network health and fundamentals. So, thinking about things like hash rate or transaction volume or miner revenue. It's like, is the network working as designed? That can't necessarily give us an idea of the relative value of the network, but still gives us kind of a long-term fundamental view on it. But then a layer above that, the beauty of this data is that you can then segment the data based on the number of coins that is located in each address and the amount of time that those coins have been in each address. And so that kind of creates these really interesting metrics that in the traditional asset space doesn't really exist. So imagine being able to, have the cost basis of every single holder, and being able to identify the flows in and out of exchanges versus miners versus retail investors. So there's a wealth of data that you can track that can assess buyer and seller behavior. And then upon that assessment, you can further manipulate the data to then identify kind of short to midterm price inefficiencies based on how holders are interacting, with their asset. And so, a famous example of that is called the MVRV ratio, right, which takes the ratio of the market cap over the realized cap. The realized cap being the cost basis of kind of crypto holders. And there you can kind of identify, when the market is underwater, when the market might be, primed for profit taking. And so I think that this is really the beginning stages of creating this framework and tool set, but one that I am in particular quite interested in and heavily focused on.